Hi, everyone. I'm James Garbutt.
And I'm Denny Dumas.
And this is the Garbutt Dumas Real Estate Podcast.
Groundhog's Day, guys, in December. You've heard us talk about it before. There has been an interest rate hike.
That's another podcast episode talking about rates. December 7th, 2022 is the date, and there was a big announcement today.
The overnight interest rate is up to 4.25, and it's the seventh hike in 9 months.
Yeah, they raised it 50 basis points. They've been on quite a tear. 4% in 9 months?
Yeah.
That's a lot.
Yeah.
And for the overnight rate is for the banks. That kind of leads to the prime rate following, and the prime rate will go from 5.95% to 6.45%. And so the people out there that chose that variable rate mortgage are feeling it right now. And one of the common topics that you hear out there is trigger rates, like your mortgage is being triggered because your payments are no longer covering the interest. And so what a lot of people out there that might be listening to this that have variable rate mortgages, they've noticed their payments going up lately. And this rate announcement is not a 50 basis point announcement. I don't think is unexpected, because I think, I have no proof, but prior to this episode, Carl asked me what I think it was going to be, and I said 50 basis points, and I said that because I thought it should be 25. Not that I'm a wizard at this stuff by any means, but last time we did the rate announcement, the U.S. did a 75% basis point announcement, so the U.S. raised theirs higher. So I thought because the U.S. went higher, ours wouldn't be that low. So I'm not surprised with the outcome, but I'm a little concerned about the aftermath. Hopefully this is the last of it. I think there's a good chance it might be, but I also think if it's not the last of it, I think the next rate announcement should be a small one. But what do I know? This is all what if.
We're hitting some interesting milestones. This is the highest that the rates have been since January 2008.
And that was a peak before a trough of a market. And what happened? So January 2008, it was at this level. And towards that summer of 2008, the market crashed. And in the fall of 2008, let's call it from August 2008 to January 2009, I think there was about a 20% dip in prices. Banks were collapsing in the U.S. It was a very different environment today. I think this pattern of events moving forward might be completely different than that. But if we followed suit, that would mean that the later half of 2023 might see a further downward pressure on prices if there is a lagging market like there was in 2008. I don't think that's going to happen, but what I think doesn't matter.
Something that was very prevalent in 2008 and 2009 were foreclosures. What are your thoughts on foreclosures in Vancouver?
I don't see them. So I think one of the big differences between now and then is, foreclosures were more prominent, and maybe they will be in 2023, but in 2022 it's negligible. I just don't see them, and I think one of the reasons is people have more equity, and there are probably some distressed sales, but those distressed sales still have equity in them. Now there are going to be exceptions now because there are people that paid, call it 10, 15% higher prices in February of January of this year than they could sell for today. And so oftentimes you see foreclosures more prominently when the people that are foreclosed on paid a higher price than it's worth today.
More recently, right? Yeah.
And I don't know. Have you seen any foreclosures?
I haven't. I've had a lot of clients call me and ask, like, "Oh, are there any deals out there that they smell blood in the water?" But there aren't. I mean, yes, there's deals out there, but not foreclosure type deals.
It's been a while since I've been at the courtroom with the lawyer, wondering, submitting my sealed bid for the client in a room of other people that are offering on the same place.
It's true.
If you've ever been to a foreclosure sale, it's quite an interesting process. It's a good one to try, but that's not what we're talking about today.
No, last time I won one of those was in 2017, I think, and that's like few and far between.
So it's been a while.
Yeah.
So the short-term impact of this rate announcement is that a lot of people are paying a higher mortgage payment. What that might what 2023 will bring, like the spring will start showing its colors of who that's going to impact, because there are legitimately people that probably own properties right now that can't make that payment or are struggling to make that payment. What if you were to guess, what do you think is going to happen in the first quarter of 2023 when you think of, let's call it, the forces in the world of higher rates that are causing more distress and disturbance versus the natural season of real estate where there's naturally more buyers and sellers that show up at the start of a year versus after a holiday season.
Well, interestingly, like January can be a very light month, so can December for real estate. And on the Bank of Canada website, it says it takes 18 to 24 months for us to feel the effect of these interest rate hikes. I think that stat is maybe angled towards inflation and different things, whereas in the real estate market, we feel these things quite literally overnight. When there's an interest rate hike, people who have pre-approved mortgages, those pre-approved mortgages change rather quickly, almost instantly. And especially in Greater Vancouver, I've noticed, like we've talked about many times, the mob mentality, the fear factor, the clickbaity things that we see online, those really affect buyer sentiment and buyer feeling when they're out there. So I do think it's going to affect it at the beginning of the year. I think we're going to see people do the sit back and wait, see what happens type of thing. But at the end of the day, the supply in Vancouver is low. I think that, the new rental restrictions being lifted is going to help some people that are in a pinch, because if they don't want to sell but they can't afford it, they can move back in with mom and they can rent their place. Yeah. So I think we're going to see a lot more of that than fire sales. I think that people are pretty stubborn with prices when it comes to their property in Vancouver, and they don't like to give it away. We've run into many sellers lately that are priced a little out of the market value range because they were been on the market for 3 months and the market value has changed in the last 3 months. Yeah. And I think we're going to see some people remain stubborn throughout the winter months.
Yeah, there are. I mean, there's still a lot of people in the city that want to move, and there's people that are upsizing. There's a lot of immigration anticipated. So even in a high rate environment, I could see the market doing okay. But I still think that 2023 is likely to be, at least in the first half of it, month over month, probably under the 10-year average in terms of sales volume. Like I don't see January, February, March having sales volume that's above the 10-year average. I mean, just to kind of put that in perspective, the November stats, when they were released, November sales were 36% below the 10-year average, and we've been below the 10-year average since spring. I don't remember exactly which month, but I think that's like in terms of a specific measurable. I think rates need to come down or at least stop going up for that to start happening. And if you look at kind of patterns, and we were kind of repeating some of the stuff that Denny and I did in the last rate announcement podcast, but 2008, if I remember it correctly, the peak bank prime rate was around for approximately half a year, but the prime rate was high for I think as much as 18 months, or at least 12 to 18 months. We may live in a world where things happen quicker, but when I look at when I'm listening to from the podcast and the speculation that I'm listening to out there, a lot of people think that we're at 6.45% now. That is around a lot of people's guess of where it will peak, and there's a lot of talk that in the later half of 2023 we'll start seeing it come down. And one thing I will mention is I'm on a email list for lots of things, and some of them are mortgage brokers, and a lot of mortgage rates right now are between 5 and 6%, but for call it 6-month terms to 1, 2, 3-year fixed mortgages. But I did notice a 5-year fixed was offered under 5%. So when yes, the short-term mortgages are, call it 5.5, 5.9%, but you might be able to get a 4.9 5-year fixed. And in 2008, I remember a client getting a 5-year fixed at 5.99. So the rates that are offered today, in theory, are better than what we've seen in the past. So we can absorb a little more damage, but I don't think too much more, and not for a long period of time.
Right. I think emotionally, people in Greater Vancouver aren't going to be able to handle another rate hike. If it goes over the January 2008 number, I think emotionally people aren't going to be able to deal with it. I think that will be a nail in the coffin for a little while for the market. I don't see people being able to get past that.
I always said if rates got up to 5%, never mind 6.45, the sky's going to fall and the world's going to fall apart because our real estate prices are so high. The only exception to that is the rates can be high for a short period of time and have relatively minimal impact. Right now we're talking to December. It's always a slow month. But if rates are high in May, that's where I'm very curious to see where the colors start showing.
Right. Yeah. And again, history usually repeats itself, and
in some way, shape, or form.
Yeah, and Vancouver has a very bounce back market. It gets right back into shape when when the market when the rates start to go down. Yeah.
Vancouver can go against the grain as well. Vancouver you can have macro stats where you might see Canada housing prices go down 10, 15%, but Vancouver goes the other direction. It goes up 10%. It's gone against the grain in the past. It's a unique city. We will see.
Hang in there, guys.
Yeah, if you've made it this far in this episode, can't wait till our next bank rate announcement episode. When the next announcement is, I believe January. Oh, geez, I don't want to. I'm putting Carl on the spot here. January 22nd, Carl. Is that when it is?
I think it's end of January.
25th, January 25th. That's when the next bank rate announcement will be. You can bet that we'll have a podcast on it.
We're gonna run out of stuff to say, guys.
If you made it this far, we appreciate you listening. If you are in a situation where your mortgage payment is getting too high and you need to sell, we would love to hear from you.
We're happy to give advice on if it's the right thing to do to sell, if you maybe could hold on to it. We're happy to help and guide you in any way. We have a lot of experience with homes where people are under a lot of pressure to sell.
Yeah. And oftentimes our recommendation is not to sell in December, but there is an argument for a January, February, attempt or try, depending on what product you have. And this is where we help bring clarity to clients. So if you're thinking about doing something uncertain, reach out. We'd love to help.
Remember, there's a lot of blanketed statements out there in the media. You need to get very pointed information that helps you and pertains to you and your property.